I am JB Bryan, the President and Chief Investment Officer at JB Bryan Financial Group, the home of AfroEconomics indeed. And make sure that you register at AfroEconomics.com so that you can get all of the information on how to participate directly into the webinars. Because of those of you in the webinar, I want to get your feedback. I want your questions. I need your support. I need your interaction. And I really appreciate y'all. And this probably was one of the most responded to webinar scheduling. And I really appreciate that. But the challenge is that you have to start early, because the Zoom webinar system, you have to download it, you have to get to know it, you have to, really know what you're doing. And then after the second time, you're definitely on point. So I made sure this time that I logged in early, but that doesn't always help. So make sure that you log in early and you get on there so that you have the system. And I also like it because members, we do membership meetings sometimes using the Zoom system, not to give them a plug or anything, because before you know it, I'll switch to a different webinar system. So, but the webinar allows us to interact directly, regardless of which one that you use. It's a great opportunity for us to talk. So that please hit the Q&A whenever you have a question for me about the stock market does not discriminate. I just put all those pictures of the market behind me in different ways that we see it and we view it, because it is true. Now, my entire career, I have decided, I just started early on. I started the firm in 1995. And before that, I was a stockbroker for a wirehouse. And before that, I was in sales in radio. So I have always been in commission. Now, what does commission have to do with anything? Well, when I discovered commission, I discovered that I never had to ask anybody for a raise again. And the same applies to the stock market. But you don't have to put out the effort. But when you invest in the stock market, you don't have to worry about discrimination. It is your choices, your good advice that you receive, your good research that you and your advisor do, that it's impossible for the stock market to discriminate against you. It is offering the same growth potential to everybody who decides to get involved in it. Now, the part is that it's the sacrifice and the tenacity that is required to get involved in the stock market. That's the challenge. But now we are not stopped from being able to participate in the market. You can go right into my webpage even, and you can set up a brokerage account. You can go right into AfroEconomics, click on the investment portal, boom, set up your investment account. Within my career, I have met Black people who were not able to set up investment accounts at the investment firm where I started my career. So now that blatantly was a process of discrimination, of not allowing us to fully participate in the stock market. That is sad and ridiculous, and it impacts Black wealth today. And you don't hear that talked about, how we weren't given the opportunities to participate in the stock market in 1929. So when I look at this research and it says, if you take $2,000 and you put it in the S&P 500, and starting back in 1926, and say $1,000, starting back in 1926, on average, that the stock market, on average, since 1926, has done about a 10% return using the S&P 500 average for using that index. So we're looking at a 10% average, that over a 46-year period, that $1,000 will have grown to more than $1 million invested in the S&P 500 over, over that time period. Now, think about that. Think about if you take $2,000 and then you put it into the stock market and just that $2,000. Now, in the other example, of course, that $1,000 I should add was $1,000 each year. $1,000 each year. But if you take $2,000 historically and just put it into the S&P 500 at a 10% average, which it has done, and then that would be worth, without even adding to it, over a 30-year period, over $34,000. Now, we see a lot of things that, are just doing extreme things, and that, and everybody's wondering like, oh, is this going to last? Is it going to last? Is it going to last? But we do know that this has passed the test of time. That you're talking about an opportunity that only a fraction of our community is participating in the stock market as an option, even when you look at their participation through their work plan. That people are spending their entire years working somewhere without participating in the retirement plan at work at all. And when they do participate, they're not participating in the stock market as an investment option. It's almost like some people have become millionaires just because their employer decided to match them with their company stock that they built from working there. See, when a company matches you with their company stock, they're saying thank you because you're the one that made this company so strong. You did it. You built this. Your work, made the company profitable, made other people want to invest in it, increased the demand for that stock, increased the sales for that company, increased the earnings and the profits for that company. But by participating in that, they can't decide, well, only this group of people are going to get that, that capital gain. They're going to get that stock price to go from $10 to $20 a share. Well, if you participated in the stock market over the period of time where I was talking about, no matter your sex, your race, your religion, you're going to enjoy that return. What has happened a lot for us, though, we're participating. When we have participated, we've been overfeed, overcharged, put in the wrong investments. You still see it now. Companies focusing on our community and focusing on paying and on putting them in investments with huge sales charges and fees on them. When they're at that same investment is sold on another platform and it does not have that huge sales charge in there. So that's why I tell people, when you're looking at a company, say Primerica, and they're focusing on you, you have to say, what is the root of this investment? This investment, what are the sales charges that are involved? And the AfroEconomics investment portfolios do not have sales charges on the investments that we're putting in the portfolio. And any investment fees that are charged for your account are fully disclosed as advisory fees for helping you choose that investment. In many cases, if you have a wrap account, everything's included so that you are able to enjoy these returns going higher. Because if the market did a 10% return historically, but you're invested in something that's charging you a 5% fee, then you didn't see that 10% return. You saw 5% or less. And if the cost of living is going up 3%, then your real return was even worse. That 5% is not enough. So historically, what has done best at outperforming inflation? That has been the stock market. But we have not been able to enjoy it the way we should have been. No, and there in so many cases that I can tell, and that's why the membership of AfroEconomics is so important, because it is about just helping you maximize your investments no matter where they are. This is not a sales program, it's a service program. If you decide that you want to set up an investment account using JB Bryan Financial Group, the registered investment advisory firm, to assist you in your portfolio, we can do that anywhere or held in custody with assets under management with us. But we can help you regardless of where the money is. For example, the bulk of us have money in our 401k. So we're too often, when we're talking to financial advisors, they're talking to us about buying something else when they're not registered investment advisors. So they're not licensed to just help you make sure whatever you do is in your best interest. So you have to be careful to make sure. So we'll say, well, and a lot of us have had negative experiences with the stock market, with investments. But when I get to the root of what happened, it was not really our people working with legitimate financial advisors. There's a whole bunch of people now who are out here as advisors and telling you to buy this and invest in this, and this is guaranteed, and this will get you rich, and this and that. You gotta realize the risk involved in that. You have to realize what you're doing when you expose yourself to that type of risk. And I really don't feel that we as taxpayers are supposed to try to compensate people for taking on unnecessary risk. When you watch that stuff on TV, it's like they were just being greedy. They should have known better. You really know, I believe that we know deep within our heart when something is legitimate, because anything that sounds too good to be true generally is. It is. And you hear it all the time. They'll say, oh, it said they was going to do this and they were going to do that. And if I sent in this, they would send me back this. And, and then you do it. Well, where does greed come in and knowledge stop? So AfroEconomics is about knowledge. It's about us looking at managed and measured risk and looking at the fundamentals of what's a good investment and what's not, and what is actually a legitimate, legal, regulated investment account. That's what I'm talking about. So let's talk about my top 10 reasons why we should invest and the benefits, because I think that I've fully articulated that as long as we participate in the market intellectually in the right way, it will not discriminate against us. There are certain things that are out there that do focus on our unfortunate lack of knowledge and understanding of what we really legitimately should do. And that's why the government has moved towards only allowing registered investment advisory firms and licensed investment advisors to help you with retirement accounts, because they feel that the person should have a fiduciary responsibility when they're helping you choose investments, that they have to make sure they're working in your best interest. That's how I am regulated. If they don't say that, if it doesn't say registered investment advisory firm, then it's not. So let's talk about why we need to invest. We need to, well, the bottom line is that, number one, I said we just need to do it. We can't say that old adage that I'm going to get involved in that work plan when, when I've been here a year or after 2 years, or, I'm not going to be here that long and I'm not going to do it. No, we have to just do it. Do not delay. Doing nothing is very expensive, very expensive. So I want to make sure that you know how important it is for you to take advantage of right today. I need to increase my financial knowledge, and I need to take advantage of any financial opportunities that are out there for me. I think that I'm encouraging you to become a member of AfroEconomics as an individual, as a family, as the Gianyame membership, whichever membership is most appropriate to you, check it out. The entrepreneurship membership is right on point, but about getting your financial empowerment started today, not next year. Next year needs to March. March leads to June, but today, what you do today could make a huge difference, especially when we're talking about we have a couple of weeks before year end, so you still have some tax decisions that you can make. So today, just do it. My second point is that it's important for you to start as early as possible. When I started this discussion, I started talking about how money can grow over time. $100 over a 25-year period at 10%, just at $100 is at $1,000. $100 at over 15% for 25 years, that 5% difference, you're looking at $3,000. So at 5%, $100 over 25 years was only $339. At 10%, it's more than doubled. It's at $1,083. So time on your side. With 10%, with 10 years, $259. 10% with 25 years at $100, $1,000. So imagine if we were talking about even bigger numbers. Huge, huge. It'd be the difference between $250,000 and $1 million, because you just didn't give yourself time. We'll have to give yourself more time. Start as early as possible. Think about that first principle of AfroEconomics, legacy, and take advantage of why it's important to make sure that your children learn from what we've done and what we're doing. Don't think of it as they need to learn from my mistakes, because you didn't make any mistakes. We did everything that we did based on the knowledge that we had at that particular time. So we're trying to give them knowledge earlier in life. That's the benefit. That's how rich people stay rich. But it's also very hard for them to have another generation of rich. You'll look at it, and rich people tend to become unrich in the next generation, because that meant we're not teaching that next generation what to do. So my second point is start early. Start early with when you think about the stock market, you have to think about the stock market. When I talk about this 10% return over the long term, I'm talking about the long term. I'm talking about 10 years, 20 years, 30 years. I'm thinking in decades. You have to realize that over the short term, that graph, look at this. Over the short term, you got this volatility. It's real. But over the long term, you don't even remember that. You don't remember all that happened there. But you've got to commit to the long term. The third point is pay off your debt. You want to get a guaranteed return on your money. You have a credit card debt that's growing at 18%. Well, it has outperformed the stock market over the long term. So that 18% has got to go. That 30% has got to go. You want to get a return on your money? Get rid of the consumer debt. Get rid of it. And then a fourth point is invest for the long term. Invest for the long term. And then a fifth point, get the match. Get the match at work. So many of you, and some of us don't have that. But most of you do. Even those of you who work at a government entity, the governments are now providing a match or some sort of participation, and too many of us are not taking advantage of it. Get the match. Even if you think about it, if you own your own business, you can do a match for yourself. You can put away some as the employer, put away some as the employee, and reduce your salary. So you can, but you can do some things. There are some plans that we can set up for you as a self-employed person. So make sure that you get the information on what can I do for myself, right? What can you do for you? And make sure that you're taking full advantage of all the programs that are available at your job. And then, so especially if they have a match, the match, if they say they match up to 6%, that just means they match up to 6%, but you can still put away 10, 15, whatever you can afford to put it away for yourself. And then set up the proper allocation. Make sure that you understand that you can be diversified, but you still have everything just in stocks. What you have to realize with just in stocks, then you're not taking advantage of all of the opportunities that there are out there in the market. You also have, bond opportunities. You may want to also keep some money in cash so that you can buy things. If you have a dip in the market, you can get some things at good prices. But so you need to know, that you can diversify. I'm not saying that all of your money by no means needs to all be in stocks, but some of you, as long as you realize the risk involved, you can have a good asset allocation across different entities, into bonds, into stocks, into cash, and into outside real estate, just real estate properties. But we can also do real estate as a stock. And that's why, it's hesitant to say real estate, because real estate, like real estate investment trusts, trade as stocks very often, sometimes are partnerships, but you have your individual real estate properties. You need to see it as an investment, which is one of my points. That's number 8, but see everything as an investment. So set up the proper allocation and know your risk scores, number 7. So I set up your allocation based on how much volatility you tell me when I analyze your risk, how much volatility you're comfortable with. So I try to match you up with a portfolio. I have several AfroEconomics investment portfolios, and each of them have different risk scores, and they help me put you in the right area. So then view everything. Number 8, view everything as an investment. You're buying a lottery ticket, it's an investment. You're buying even your residential property, is an investment, but it's an investment that in many cases doesn't generate any revenue for you unless you rent out part of it or get a duplex or something like that. But, it's still an investment. The clothes that you buy is an investment. Is it a waste of your money? Yeah, it could be a bad investment depending on, what you use these things for, but try to see everything as an investment so that you will have that mind like me when every time I go to the store, I go, oh, I have to spend all this money on this. Yeah, but it's all an investment. Sometimes wise, sometimes not. And so that it's expensive. I have number 9, that it is expensive if you keep changing the investments that you have. It's and many people don't realize that. Unless I have you set up as a wrap account, like I have a wrap account where you pay a flat fee and we trade in your account as often as necessary. And the expenses of doing those trades are covered by your flat fee. Other than that, you're paying transaction fees for each transaction. Sometimes you're doing transactions and they're taxable events, and you have not thought that through because the person just called you and said, sell it and buy this, and they made money, but you never thought about the tax consequences. That's the difference between a salesperson and having an investment advisor. Be careful with the expenses involved in everything that you do, and especially the tax expenses. And then finally, my undertone of all of it, get involved in the stock market, but consider getting professional help in navigating what is best for you and your family, your specific goals, your time horizon, what you want for you. So get the professional assistance, as much as possible. You feel very confident about it, go for it. If you don't miss out on these opportunities for the long term. This is nothing new. It's been there. But we're talking about the overwhelming majority of our community is not participating at all. So let's make sure that we do as much as we can by sharing this video. Share the video. I have a podcast about the importance of the stock market and how adding stocks to your portfolio, can be important. I just want us to make sure that we're not anxious, that we don't just do anything, but that we be very careful and navigate things very carefully and research our investment options. And don't ever believe anything that sounds irrational to you. Trust yourself. Trust your gut. Look at the numbers. Look at the information. Check their license. Get all of your options. Talk to several people. Find out what's available to you at work. Get help on choosing the right things for you through your work plan, through everything that you're doing. Make sure that you have a team for yourself. Consider membership in AfroEconomics. The membership is about you and me doing personal meetings about your specific goals. We have membership meetings every Friday morning. That's cool, just to talk about something that I think is relevant for you. We're, talking about the investment portal this Friday. But most importantly, the membership is about you having someone to advocate for you as a team player for you. If you say, I'm thinking about this, making this money move, have somebody that can help you navigate it and see what's best for you. It's just about planning. Having a plan. We started off with just having a plan, looking at what you're currently doing, getting feedback on what you should do, looking at what your risk tolerance is. It's just about getting a plan. And so do what you can for yourself. Stay positive about it. And know, bottom line, the stock market does not discriminate. But we got to go out there and get that knowledge. Have a great day, y'all. Thank you so much for participating, taking your time out. Those are my top 10 tips on why and how we should participate in the stock market. Be blessed, everybody.